Well, Bloomberg has crunched the numbers and found that Nick Bennenbroek is the top currency forecaster among his peers, particularly on the U.S. dollar. He is head of currency strategy at Wells Fargo. Nick, good to have you back on again. Congratulations, by the way.
Oh, thank you very much. Good morning.
So, as I understand it, the dollar, you see, what, a 5% gain against the euro and an 11% gain against the yen this year. Why is that?
Well, I think as we get through the year, as we get past quantitative easing, as we get perhaps past the European difficulties as well, the performance of the U.S. economy is going to come to the fore, and we think that the economic outperformance is going to help the dollar against the euro and the yen and those types of currencies.
When's the biggest move likely to happen? The first half, second half, or what?
Well, I think the biggest trend is most likely to happen more in the second half. It could be quite volatile in the first quarter of the year in particular because we've got the quantitative easing, which could potentially be a negative for the dollar, offsetting against the European debt difficulties, which is a negative for the euro. So I think actually over the first quarter it's going to be back and forward, but towards the end of the year,
it'll get more solid.
It's going to be more clear sailing for the dollar.
Okay, but I'm curious to know why you see this 5% gain over the euro, though. I mean, what does that mean then for the euro?
Well, I think it's part of an overall trend. If we go back a year ago, and then, we did have a good 2010 in terms of predicting where the euro was going to go, for example. We were at $1.50, and we certainly see the euro coming down to $1.30, where it's got to now, for example, $1.25, $1.20. It's part of an overall declining trend, we think, over a number of years.
Right, but this forecast seems to suggest, though, that the euro declines are going to lessen, though, or at least slow down. Am I right?
Well, it's possible. I mean, I think there's definitely underperformance, and I think part of the reason we think it's going to slow down is at the end of the day, we do expect some resolution towards the European debt crisis, maybe an increase in the stabilisation fund.
By this year?
I would say this year, maybe even this quarter, but certainly this year.
What gives you that confidence?
Well, I think when you look at it's a messy process. It's not smooth, but when you look at what happened last May, for example, they eventually came to some agreement in terms of a comprehensive package. I think if the situation keeps on getting worse, the policymakers are going to have to respond. We still believe there's a lot of political will for the euro, so I think that situation is going to resolve itself somewhat. And as a result, the euro is going to go down at a less rapid pace.
So here's the problem, Nick, right? As one situation starts to calm down, another one starts to brew. And there was an article, I think it was in the FT today, talking about currency wars. We thought it might have been over by the end of last year. The FT is saying, nope, it's just going to continue. And in fact, you just saw Chile start to talk about currency controls. You've had Brazil talking about, coining that phrase, currency wars. It's only going to get worse this year.
Well, it's certainly provocative language, but these currency tensions, I think, are going to remain with us. And we believe, certainly you mentioned Brazil, for example. Korea is another country where they're looking at a range of capital controls, for example. Indonesia as well is another country. So there are several countries. I think there's going to be continued capital controls or currency measures taken. But at the end of the day, when you look at the strength of capital flows into these countries, Brazil's an excellent example, $100 billion over the last 12 months. We don't think the currency measures are going to be enough to fully reverse the capital flows. We don't think the currency measures are going to be...
But don't they cause more volatility?
They do cause more volatility, and so that certainly is an issue in terms of both investment and also managing your exposures in these countries. But the overall trend, we don't think it's going to be enough to reverse the capital flows into these countries, and so we don't think it's going to be enough to stem the overall uptrend that we see in a lot of these emerging currencies.
Okay, so it'll be a factor, but it won't reverse that trend, as you say, particularly for the dollar.
Particularly for the dollar.
Nick, thank you so much. Really appreciate you joining us. I was Nick Bennenbroek, a Bloomberg Best forecaster.